This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, Rich Dad Radio Show. Very important program. If I could pump my book here, this is Rich Dad's Prophecy. It came out in 2013. It says, why the biggest stock market crash in history is still coming. I have bad news for you. It's here. We're going down big time this year. And so that's why we're glad you're listening to the Rich Dad radio program so you don't have to be a victim of all this wokeism and stupidity out there in the marketplace. And here with two longtime friends, they're going to bring two different perspectives on investing and stocks and most importantly, raising capital. Mike Mauceli and John MacGregor and I are here. We're going to, in a few minutes or a few hours, we'll be at Arizona State University. And we're teaching the honors program at Barrett College, the Tom Lewis program. And we're going to be talking about entrepreneurship, but how to raise capital. Because so if you're going to be an entrepreneur, it's your number one skill. Can you raise capital? The difference is that Mike Mauceli raises capital from people like me. If you played the cash flow board game, you'll notice there's a fast track. In the real world, those are called accredited investors. In other words, if you have money, the investing strategies are different. And John MacGregor is a dear friend from Hawaii, and he raises capital, he sells investments, or he used to the E's and S's, employees and small business owners. So the big important lesson to learn today is that if you're rich, one of the reasons you get richer is because by law, you can only invest in certain things. So I'm going to be talking about how they raise capital, which is the main theme of what we'll be talking about at Arizona State University. So it's a very important program because if you want to survive this crash, it's best to be an entrepreneur. So welcome to the program, Mike.
Thank you, Robert. I appreciate it.
And John.
Always great to be here, Robert. Thank you.
So what's your background?
Yeah, so I've been in the financial industry for over 27 years now. I wore a lot of hats, circled the globe in the financial industry, a very successful career doing institutional consulting. I did a lot of work with individuals of all walks of life, all wealth ranges, a lot of business owners as well. And then I was a national sales director as well.
And what was a firm you worked with?
I started with Merrill Lynch, and then I went to Nuveen, and then I ended up at a independent financial brokerage firm. We had over 16,000 advisors, the largest in the industry, and that was called LPL Financial. Yeah.
What was it called?
LPL Financial.
LPL.
Yeah.
And this is John's book here. It's called The Top 10 Reasons the Rich Go Broke. Powerful stories that will transform your financial life forever. And this is a very important book because if you think you're rich today, this book's going to kick in right now because a lot of people who are feeling good today, tomorrow will be broke. Because as I said in Rich Dad Poor Dad, your house is not an asset. And for much of my generation, boomer generation, their house is their biggest asset and it's crashing right now. So the crash is here. So anyway, tell us about this book, John.
Yeah, I mean, this was actually your idea, Robert. These are based on real life stories of people that I knew that had everything and then lost it all due to a common psychological issue that most people have. We call the bear trap. And these are people that, Robert, you and I know that, did extremely well and lost it all. And based on, today's conversation, one of the key stories that I talk about, one of the train wrecks. And by the way, the overarching mission, the overarching message of this book is learning from people's successes is smart, but learning from their mistakes is genius. And I think that's why this book has been so popular. But one of the main stories that pertains to today is someone saying, my company will take care of me. And that is a recipe for disaster. When you think your company or someone else is going to take care of you, that always leads in financial despair.
Because you look at where the layoffs are starting, it's starting in the banking industry because they don't need no loan processors and stuff like this because the real estate market is crashing. And the trouble with the real estate market, the stock market, bond market, real estate market. Trouble with the real estate market, when it goes down, it's like a sinkhole. It takes businesses, neighborhoods, it takes everything with them because it affects so many more people. Whereas stock, you could lose Apple and you're not in Apple, it doesn't affect you. But when you lose a business or real estate and all this, it takes everything down with them. So that's why right now there's migrations out of certain states and into certain states. And one of the places they're migrating to is Texas.
Yeah.
And this is Mike Mauceli, and he talks to investors like me, the accrediteds. And again, message here is this: there's one of the reasons the rich get richer is they invest in different investments. So Mike is my oil guy, and the reason I like oil is because you can't print oil. You can print stocks, you can print ETFs, you can print money, but you can't print oil, yet at least. So welcome to the program, Mike.
Well, thank you, Robert. I'm glad to be here today.
So give us a little bit of your background.
Okay. I've been in the oil and gas business since 1980, so quite a while. And I started my own company in 1987. We've drilled, in Argentina, we've drilled in Canada, we've drilled in the United States, and as far as what's going on in the industry today, I mean, besides what you read in the media, obviously oil and gas is going to be around for a long time. I mean, it's not going away anytime soon, and I don't think solar panels and windmills are going to supply the energy that we need in the world, even though they're a vital part, but we need all forms of energy.
Right. And what I say is that civilization runs on energy. And if we don't have enough energy, or the price of energy goes up, standard of living has come down. And that's why what happened when our buddy Biden took the Keystone XL pipeline offline, it made me richer, because the oil that Mike and I were selling from our oil wells in North Dakota and Louisiana and Texas, we were selling at $30 a barrel.
Yeah.
And in 2000, when Biden got elected, oil went to a spike to 130. So suddenly I liked Biden a lot anyway. More than Obama anyway.
He has been good for the oil industry, even though he's tried to kill it.
So Mike, a big boom came to America with fracking, right?
Right.
Can you talk about that really quickly? What happened?
Yeah. Well, the United States back, if you look back at all the world wars and the wars that we've had in around the globe, I mean, the majority of them have been fought over oil, and even the Ukrainian, thing that's going on now, the war that's going on now, that's also being fought over oil, even though it's not said so, because Ukrainian has some of the largest reserves of natural gas in Europe. So, Russia obviously doesn't want that competition with them entering into the with the other countries. So that's one of the reasons why they're trying to take it back. But as far as fracking, the U.S. used to be the number one oil producer in the world. And then in about 1970, we had produced a lot of the reserves here in the U.S. through the conventional manners. We've known these unconventional reservoirs have been around for, ever since people have been drilling through them. They just didn't have the technology in order to get the oil out of the ground. And so it wasn't until they came in and started using some old technology, which allowed them to use horizontal drilling and hydraulic fracturing. Fracturings have been around since the 1940s, and they've continued to improve on that. And that obviously during the Trump administration brought us back to the, number one energy producer in the world. And, we were going to obviously be the most dominant energy producer in the world until this administration came on and started pushing the Green New Deal again.
Why are they doing that?
I think there's a lot of lobbyists. I think that, there's a lot of money to be made in this big push.
They're screwing the middle class, because when the price of oil goes up, inflation goes through the roof.
I don't think they really get that. They're seeing it now, certainly, but, they're in it for the money, and people have made a lot of money on this green push.
Yeah, I have too, because I've been selling carbon credits, and all that stuff. I mean, it's good. But if we cut all the oil off right now, could wind and solar replace the energy we need?
No way. In fact, wind and solar, I mean, they, look at Germany, for example. I mean, a prime example. Germany, they tried to push this green push, and now they've gone back to burning coal and wood.
Yeah, they're chopping down trees now.
Yeah.
Because it's going to be so cold this winter.
And if you look at China and you look at Russia and you look at India, I mean, none of these countries are embracing this climate accord. I mean, it's just the U.S. is pushing this and hoping these other countries are going to come along. But China, they're building a new coal-fired power plant every week.
Jesus. And coal's one of the biggest pollutants there is. Especially
in China. And now Europe's gone back. They're starting to burn coal. And I think that I did hear that in Europe, I mean, in England, you know, they're going to go back to fracking wells now. So obviously they're seeing that this hasn't worked either. And it's just been a big boondoggle where, you know, these green, I mean, there's a small group of green activists that are trying to push and do away with hydrocarbons. And, you know, one of the things that you can look at, you know, and you don't hear a lot of talk about is that these windmills are actually killing fields. I mean, they kill birds, they kill eagles, they kill raptors. I mean, they kill all types of birds and you know, and they want to continue to put these massive amount of windmills up. And if you look at one gas-powered power plant, if you were to take that power plant offline, it would take, if you use solar, you would have to have 40 square miles of solar to produce the same amount of energy as one gas-fired power plant.
Right. So, you know, so that's our comments on the this Green New Deal stuff. And Trump actually made us back into a net exporter.
That's correct.
And naturally, the communists of America's left nail us. I can't believe it. Can you believe that, John?
I can believe it. When you think about the motive, the left has an insatiable appetite for power and control. The end justifies the means. They don't care who they destroy. They hate the middle class because the middle class is fairly independent. They go to work, they get a job, they get their paycheck, they have their 401k or maybe a pension. They can't stand that. So when we say the left is stupid, they're not stupid. They're doing exactly what they plan on doing. This is not by accident. This is intentional. They want to squeeze the middle and the lower class as much as possible, put their boot on their neck as hard as possible, so they beg for normalcy. And when they beg for normalcy, that's when an authoritarian arises. That's when a dictator comes in.
Every time there's hyperinflation, dictators arise. Revolutions come up. That was Stalin, Mao, Lenin, and Hitler. And we're cruising for that right now. Hyperinflation pisses people off. Can't put food on the table. They can't afford to live. Lifestyle crashes. Standard of living crashes. But the bad thing is because it's energy that's driving a lot of it plus too much money, it makes everything expensive. And we're crushing us. So anyway, I'm going to tell a quick story before we go to break here. I was with Dinesh D'Souza. He wrote he did the documentary 2,000 Meals about the election that was stolen from Trump. Well, they said, no, it wasn't stolen. I mean, Dinesh proves it was. And he says, I was at a conference in Dallas with him with Prager University. And Dinesh gets up there and he says, the trouble with America is America was founded on the Revolutionary War. It wasn't a war. It was a street fight. And he says, it wasn't a big war. It was a street fight. I said, what's the difference? He says, back at the Revolutionary War, the British come walking in, they're wearing red coats, come shoot me, shoot me, shoot me. And they're marching around their red coats, and the Americans are saying, well, okay, we'll shoot you. So, so the Americans hide in the bushes and the trees and they shoot them. The stupid British just walk around, and they stand up there and they load their muskets. Americans are lying down. The British are going, you can't do that. You're not supposed to lie down. You're not supposed to hide behind a tree, and the Americans are shooting from behind trees. So I said, where are you going with this, Dinesh? He says, today the conservatives are the redcoats.
Yeah.
And the left they'll throw anything. They'll fight dirty. Look, they raid Mar-a-Lago. They do all these things with drugs and all this. They rigged the FBI. They rigged the elections. And we're marching around, the conservatives, the capitalists, in red coats and saying, shoot me. And they're shooting us right now. So anyway, ladies and gentlemen, we're at war right now, but we're going to get back to how to raise capital. So we come back. We'll be right back. Thank you.
99% of stocks are in the red. That's right, the new world economy is volatile enough to cripple 99% of stocks in a single day like it did just last month. This disaster had many of you asking Robert, I'm diversified. Why is my portfolio still in the red? But he's been telling you for years, people aren't diversifying in the right way. And Goldman Sachs agrees. They just released a shocking report declaring the classic 60-40 stock bond strategy is doomed for the next decade, already down 20% this year. And for those who think they can day trade, value hunt, or outsmart the market, think again. Goldman is radically reallocating from stocks into real assets like fine art, which aligns with what Robert always preaches: invest in real assets. Real assets like art can not only protect your purchasing power, they can hedge against inflation. In fact, the last time inflation was this high, art appreciated more than real estate and even gold at an unheard of 33% per year on average. That's why Robert partnered with Masterworks. Their results have been exceptional, 6 exits for an average net return of 29% to investors. It's impossible to name a stock or firm name that's delivered 29% to investors, even during COVID and a bear market. Some of you who are already signed up saw their exit just a month ago for 33.1% return. As a result, Masterworks has had to acquire and release more art on their platform to meet demand, and there is a wait list. But you can skip the wait list by going to masterworks.art/richdad. That's masterworks.art/richdad. See important Regulation A disclosures at masterworks.com/CD.
Feeling powerless over current events and your financial future? Financial freedom is your freedom. Robert Kiyosaki is the best-selling author of Rich Dad, Poor Dad. Over 40 million people have taken Robert's advice. Now it's your turn. Attend Robert's free virtual wealth building event. Claim your free access now at richdadfree.com. Don't wait, access is limited. Go to richdadfree.com. That's richdadfree.com.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. And again, we are in the room with dear friends for a long time, John MacGregor and Mike Mauceli. John is in the category of the unwashed. It's called financial planners, but I forgive him for that.
I'm recovering.
And Mike Mauceli, again, if you played the cash flow game, there's a thing called the fast track. And the reason you want to get out of the rat race onto the fast track is that's where the accredited investors invest. And there's not that many of them. But one of the reasons the rich get richer is they get better investments and they pay less taxes. So that's the difference here. So John, when you're marketing to, employees and small business owners and all that, what are you telling them? I mean, in this market today, look at this thing. And this is Rich Dad's Prophecy, 2013 is now 2022, September 2022. This market's going to come down big time. So what are you saying to people now?
Well, most people sadly have a buy and hope strategy. They buy their investments, their mutual funds, and their 401k, and they just hope everything's going to work out. As I've said before in the show, hope is not a retirement strategy. And that's what most people do. They have their head in the sand, and so far they've woken up today and they've seen their 401k down by 25-30%, wondering what happened. And this is not over. And if people think that that's going to get better, it's not. Things are going to get a lot worse, as Robert says.
And the biggest bubble of all, most people don't know this, is corporate credit. And what was happening during the boom when they kept dropping interest rates, zero interest rates, many companies couldn't grow their companies. So they would borrow off the balance sheet of their company and they'd buy back their stock. And they would stock the company full of this debt to buy back their stock. Like Apple just uses their credit to buy more Apple stock. I mean, that's what it means. And now the stock markets are crashing. The same with bond markets. The reason London or England just went down is they couldn't make the pensions, the defined benefit pensions for the people. So what they did is they borrowed money at 0% to buy bonds at 3%, hoping that would pay for the retirees. And there's, like in America, 10,000 a day retiring today. And all of a sudden, when they did that thing where they reversed and the interest rates dropped, bond markets dropped.
Bond market's been crushed. But most people don't realize, here's the thing. You can make money in up markets, of course, sideways markets, and you can definitely be making money in this downward market. Right. People just don't understand. I mean, I teach a very simple investment strategy where you can be making money in any type of market. It's the same strategy my My 92-year-old father is generating $12,000 to $15,000 a month consistently as a hobby. He doesn't even need the money. So you can make money in these markets regardless of what's going on.
Right. And so the difference here is John stays in paper. He's never offered me a deal yet because I won't touch it. I won't touch anything you can print. If you can print it, toilet paper is printable. That's how I look at it. So Mike, when you talk to an accredited investor like me, what's the difference between talking to a 401k person?
Well, it's as John said, a lot of people with 401ks, they're a buy and hold strategy. I think most people that are accredited and have made a lot of money in their career, one, they want to put that money to work where they can generate cash flow, and two, they want to not pay taxes. Right. And legally, yeah.
John and I talk about dancing to hula in some jail cell with some boyfriend,
Well, I guess these new 87,000 new IRS agents are going to make everybody do it legally. But anyway, as far as oil and gas, you have what's called intangible drilling cost deductions, or IDCs. And IDCs is pretty much you can write off right at about 75% of that in a well. So an investor that's coming in and who is in a top tax bracket, he's able to actually create a savings because the federal government is coming in and they're actually writing that off because they want people to find, regardless of what you read in the paper today. We still need oil and gas reserves, so those tax advantages are still there. So in essence, if you're in a 35% tax bracket and say you invest $100,000, that's about a $27,000 savings that you're able to gain, right when you invest. So that reduces the amount of risk you have or money you have at risk.
Right. That's what Tom Wheelwright writes about in his Tax-Free Wealth book. He talks about tax breaks are incentives. So if you start a business, they give you an incentive for that. You drill for oil, you provide housing, they're in tax incentives. But if you're an employee or a self-employed small business owner, you get taxed the highest. So let's say on top of that, when we strike oil, I get a depletion allowance too.
Right.
What does that mean?
Well, the depletion allowance is on every dollar that is produced or you make income from oil. The federal government allows you to take a 15% depletion allowance. And so you're able to take that off of your income that you're generating from oil and gas. But the main plus is that, you're looking for cash flow, right? You're looking to strike oil. You're looking for that oil.
We're not into buy, hold, and pray.
No.
that's right. I'm not. I want money. I want my money back and pay no taxes.
Right.
Okay, keep going.
And so basically you're drilling wells. The areas that we participate in are primarily the Bakken up in North Dakota, which it's it's an unconventional play, like we talked about a little bit earlier, the horizontal play. But there's been over 14,000 wells drilled there now. The play actually started in 2008, 2009, so it's no longer an exploration play. A lot of these plays, when they originally start out, they kind of start out like a gold rush, right? Where someone struck oil and all of a sudden you've got all of these entities, big companies, and everybody's brother, sister, uncle is running out trying to lease land. And so you end up with, a lot of different interest holders in this land. And then you start your drilling phase. And as I said, you're not going to drill an unsuccessful well. You may drill a well that doesn't pay out because it doesn't produce as much oil as you think it's going to produce. But as far as in these types of plays, they've been defined now where it's kind of like a bullseye, right? You know where the bullseye is, and that's where you want to drill at.
And what's happened is some of the things I've invested in, they're still paying me, right?
Right. You're getting a check every month.
Yeah. And that's why, John, you don't find with a 401k, celebrating because the cash is flowing the other way. It's flowing to Wall Street. And when I invest with Mike Mauceli, it's flowing towards me, and the government gives me tax breaks. Anything you want to say that in defense of the financial planner, communist pinkos?
That's a steep curve.
No, look, guys. The point here is this: the reason we have the cash flow board game is for you to get out of that rat race and qualify to invest as an accredited investor on the fast track. But of course, they'll say most people can't do that because they don't have any financial education. But they don't have enough money anyway. I mean,
100%. I mean, the average 401k is $70,000. I mean, and that's what people are expecting to retire on at age 65. I mean, it's absolutely scary. How long will $70,000 last in retirement? And so I'm a paper guy, but I firmly believe in oil and gas, other commodities like gold and silver. I think everyone should have a mixture of everything. I mean, you're even in Wagyu beef right now.
I'm in beef because you can't print a cow yet.
Yet. Wait till the left tries to take the cows out. But I'm a paper guy. That's what I like. That's what I've been involved in for many, many years, for 3 decades now. And I can generate capital gains using a very simple strategy and cash flow. I can turn a 401k into basically a pension for life. That's just the game I play.
Right.
And that's what I enjoy doing. So.
So how can they find this formula from you?
Oh, well, people can contact me and then we can arrange, if you want to take it further, contact me on my website at johnmacgregor.net, and then we can go from there.
So would you tell the story of the time you went, because you always check out the other financial planners in the industry, right? And you went to that, what do you call it, rubber chicken dinner where they invite you in and all that. And the guy was up on stage. You're going, who is that? I've never seen him before.
Yeah. I've got a lot of stories like this. I like to see what the competition's doing. And I shouldn't say competition. I just like to see what other advisors are doing. And so I was living in LA and I kept hearing about this lunch and learn kind of thing. This financial advisor out of Texas had multiple satellite offices all over the country, and they offer these luncheons. And the real enticing thing is he said he had the greatest chocolate chip cookie if you attend. And, if anyone knows me, that's my kryptonite. So I was sold on the chocolate chip cookie. And so I went, and I was the youngest by 20 years. Everyone was retiring or retired, and they couldn't wait to hand over their money to this guy before the presentation even began. He wrote a book, and he got everyone out of the market in 2008. He did well. It was a one-time kind of fluke, in my opinion. But everyone still believed that this guy was the Messiah. And so the presentation began, and the guy was, he was a character, but he gave your general financial planning presentation, how the markets work, how they manage money, et cetera. He gave some impressions and so forth of some characters. So everyone in the room signed up for the follow-up consultation, 100%. I mean, like I said, they were ready to write the check right then. So I scheduled my meeting, have the meeting with this young financial advisor who just failed from another financial advisor firm. They gave her a script.
Was she good looking?
Yes, she was attractive. And they gave her a script to read, and I started. That's when my questions started. And finally, she looked at me and she's like, "Wow, no one has ever asked me questions before. She's just, can we get going? Are you ready to set up the account?" And anyway, in the end, I said, "Okay, I'll think about it." And I said, "By the way, who was that guy who gave the presentation? It was kind of an interesting guy." She leaned in. She goes, "Shh, don't tell anybody. He's not a financial advisor. He's a Hollywood actor." And my jaw just dropped. It was unbelievable. Hollywood actor doing this financial investment presentation. And she goes, "Did you watch the Super Bowl last weekend?" I said, "Yeah, absolutely." She goes, "Well, he was the lead in the Papa John's commercial." And there he was. I saw the reel on YouTube. Unbelievable. So, I call it the chicken dinner syndrome. People get invited to these chicken dinners and they're just enamored with the financial advisor and the staff and all this stuff. And they don't do any due diligence on this person. They don't ask any questions because they're afraid to ask questions. They don't know the questions to ask. And then they just give them their hard-earned money without any due diligence at all. It's a train wreck in almost every situation.
So there's another, which John and I always talk about it, and we don't mention it because we don't want to get sued. But on Fox, is that one thing is we don't make money unless you do something.
Oh yeah.
What's their byline?
Well, that's Fisher Investments. They're out there in the public in their commercials, and what they're saying is so misleading. First, they say we do things differently than other money managers, and other money managers don't understand what we do. They do what every other money manager does. They pick stocks, they buy them, and then they sell them when they don't like them. Bottom line, that's what they do. Then they say they're a fiduciary, which makes them holier than thou. If people are pushing fiduciary, run. That is the new F word in the financial industry, and it is so misleading. Because you're a fiduciary, you think you're protected. You are not. Remember Bernie Madoff?
Yeah.
He was a fiduciary, okay? And then in the end, they say, well, our clients, we do better when our clients do better. Well, yes, of course, that's how money managers work, but they're doing better when you're not doing better. So when the market's going down, they're still doing better. And then they say, well, we don't charge commissions. Money managers don't charge commissions. So that entire commercial is just bogus. It's so misleading.
How did they get away with it?
I really don't know. I'm sure their lawyers have looked at everything that they say and they've skirted around it very closely, but I don't know.
Jesus.
I mean, they're raising a ton of money. They're a marketing machine.
So what do you think they're saying right now? Because America, this is September 2022. I'm predicting the biggest crash January 2023, just like Mother England went down, because they're playing games with money and interest rates and all that other garbage. But what do you think what does a financial play say to let's say a 68-year-old, 70-year-old guy whose 401k is toast?
I'll tell you exactly what they're saying. I just had a conversation with a couple of advisors the other day. They're saying stay in. It's buy, hold. It's not, and then they'll say it's not timing. We don't want to time the market. It's time in the market. Don't worry. Everything will resolve itself. Everything will come back as usual, as it always has in the past. Those are the standard bylines that you're hearing from the financial industry. Just stay the course.
So if a person, I'm not against paper assets. It's just being an entrepreneur. I don't have to invest in them. You know, I don't trust paper at all. Toilet paper's on it. I don't trust it. But what do people paper has many advantages that I don't have. I mean, a hard asset guy doesn't have.
Yeah, I think the big one we could just focus on is liquidity. I mean, I could get out like that with a click of my smartphone. Whereas hard assets, you don't have that flexibility. So that's the key advantage that I like. Yeah.
So when I invest with Mike, I'm in for the long term.
Right.
And that's why I've got to be careful what he invests in, what he does with the money. So final words, Mike. I mean, when you look at the oil industry and all this and the killing of condors and buzzards and all this stuff, I only invest in what cannot be printed. It's that simple. But I'm not invited on most of the stock shows because all they want to do is sell you more stock. So what would you advise somebody who wants to switch out of paper into what you're doing? Any advice?
Well, just on the oil issue itself, I mean, I think, a lot of people don't really understand, what oil is used for. Oil is in just about everything we touch.
Right,
feel,
plastic, paper
bags, I mean, and food. And of course, we're going to see real food shortages, right? Fertilizer, we're going to see real food shortages here this year coming up. I think Europe is in a really bad place. But, I always, a lot of our clients, they're in paper. I mean, they take a portion of their income and they put it into oil and gas or gold or silver or something, just to have that diversification. And so, for an investor that, just a normal investor, a lot of them, they obviously want that diversification into energy because I think everybody sees that, they can see through this stuff that this administration is trying to push. I mean, they go to the gas pump every day. Diesel is still selling for close to $5 a gallon. I mean, as far as that, gasoline is still, even though they can continue to say, that it's going down, I mean, they're depleting our national reserves. I mean,
what is that? Why don't they let you drill? I mean, why are they depleting our reserves? They could just drill more.
One thing, they want to do away with hydrocarbons. Secondly is you've got a midterm election coming up that obviously they don't want to see high oil prices. I can promise you after the election is over with, they're going to stop taking oil out of the national reserve, the defense reserve, and then they're going to, we're going to see high prices again. And but that's the reason why. How many barrels of oil how many millions of barrels? I think they're releasing 1 million barrels a day just to keep the price down.
So they get reelected?
So they get reelected, and then they can go forward and push this Green New Deal even further than it is today.
So that's what Dinesh D'Souza says. We the conservatives or the capitalists wear the red coats now, and they shoot from the trees. Interesting, huh? So how do, again, you have to be an accredited, what's an accredited investor? What's the requirement?
Well, an accredited investor is an investor that has made $200,000 for the last 2 years and expects to make $200,000 again next year. Or for a couple, it's $300,000. Or it's an individual that has $1 million net worth, excluding home and automobile.
Yeah, that's nothing.
Yeah, most homes today are, about that big.
Anyway, so I want to thank you guys. We're going to Arizona State University. We're going to talk about how the most important of a job of a capitalist is to raise capital. And you were telling me when you started raising capital, you enjoyed it so much, right?
Yeah. No, I love raising capital. I mean, I've been doing it since 1980 and, obviously meeting people, talking people, trying to help people, and that's the main benefit I get out of it.
But that's the inability to raise capital is why people are using S's.
Right.
When I see that, I go, so that's why when I was in 1974, when I came back from Vietnam, and Rich Dad says, you got to learn how to sell. You got to raise capital. And if you can't raise capital, it traps you. And then I did the same thing you did. I got so good at it. Hi, and selling wallets and doing all this stuff and talking to investors. And I took my eyes off the business. Yeah. And my accountant, Stanley, ran off with the money. Story of my life, right, Greggy? Because it's such a fun game if you can handle the raising of capital, right?
Absolutely. I mean, what my grandfather told me many, many years ago, he said, John, whatever you do, learn how to sell, because you're either going to be selling a product, a service, or yourself. Learn how to sell.
Well, this is 74, I'm still in the Marine Corps. I don't want to sell because my poor dad hated salesmen. That's the problem. That's academics. That's the reason they have no power. They can't sell. And so he's telling me, so I keep telling my rich dad, but I don't want to sell. He says, Robert, how's your sex life? I go, non-existent. He says, because you can't sell. So anyway, thank you, gentlemen. I trust everybody. Thank you for listening to this Rich Dad radio show. Again, this is Rich Dad's Prophecy. This is the top 10 reasons the rich go broke. And right now, these books are saying the same thing because the biggest stock market crash in history is here. It's coming around January 2023. What happened in England, that's going to happen in Japan, already happened in Argentina, and we're toast. So, ladies and gentlemen, thanks for listening to the Rich Dad Radio Show, and take evasive action. Thanks very much. Thanks, you guys.
Thank you.
Thank you.